Have you ever wondered why a lot of your setups are failing, even though it seems like you're doing exactly what you're supposed to do? All the fair value gaps that you're taking seem to get violated and stop you out. All the order blocks that you're taking seems to get violated and stop you out. It's almost like the market is out to get you. But of course, there is an explanation for this, and I promise once you start looking for this, your win rate will increase. The term that we're going to be talking about today is called displacement. Now, displacement is just a fancier word for aggression or volume, but it is essential to understand in order to find consistency in your setup. And that could be the reason that you are losing the majority of your trades, because displacement is what creates market structure, and market structure is what us as traders need to understand and follow. So in this video, I'm going to give you tips and examples of how to use displacement / volume to your advantage, and we're going to be looking at a few examples right now. So essentially what you are going to be looking for in the marketplace is around 2 to 3 consecutive candles of the same color. So either 2 to 3 consecutive bearish candles or 2 to 3 consecutive bullish candles. If there are 2 to 3 consecutive bullish candles, that would be considered bullish displacement, and vice versa, right? Now, it doesn't always have to be 2 to 3 candles. You know, it could just be one very big candle with a lot of volume, or it could be 2 candles with a lot of volume. So the first example I am going to give you is a great example of an ICT 2022 model where we look for a predefined liquidity level, which we have here. We have equal highs here in the 1 minute, which just got taken out. But how do we know if this is actually a valid liquidity sweep or if we're just going to continue higher? Well, what you look for is displacement, okay? So if this was me trading the 2022 model, I would want to wait and see if we displace above this high. I would want to wait and see if I get 2 to 3 consecutive candles above the high with significant volume, right? And if I don't, that would indicate that it was just a manipulation move and we are probably going to go lower. But if we do end up displacing above it, that would then indicate that it was not manipulation and the move was intended to go higher. So let's see what happens. Now, right from this picture, would you classify this as displacement to the upside or a lot of bullish volume? Definitely not, right? We have not had a single candle closure above the high. So I would wait a bit. And right here, we get bullish displacement, right? But what you look for in a scenario like this is if we displace above this high. In this case, we got 3 consecutive bullish candles, but we did not displace above the high, right? So what happens then? Now we get a fair value gap right here. So this would technically be your 2022 model right here. And we have market structure backing up this 2022 model. And we're going to go for a 1 to, maybe that's a bit of an exaggeration. We'll go for 1 to 3. Okay. We'll let it play out. And yeah, that was very fast. But as you can see, we had market structure supporting our 2022 model, right? Because we failed to displace above the high, right? As you can see here, we come back down and we fail again to displace above this high. And that to me indicates lower prices. Now, what you could do in a scenario like this, if you're not comfortable trading that fair value gap here, you could wait for this candle to close like this, indicating that, okay, we're probably going to go lower, or you could wait for one more. This is a very, very bearish candle, right? This is a lot of bearish displacement. And this should tell you that we are at least going to hit this low, but probably going to hit this low. And all of this, we know because of the market structure, right? So it is essential to understand displacement and how to look at it. And all it really is are we displacing above a high or are we not? Now, this is not only used for confluences for your entry model. I personally use this a lot for my daily drawn liquidity to establish where I think price is going next. And in this example, right, we have a high here. And what happens? Do we displace above it? As soon as I get this candle closure right here, I am confident that, okay, the drawn liquidity is probably higher. Why is that? Well, because first of all, we failed to displace below this low. That's obvious. And then we successfully displace above the high. That indicates that price is not ready to switch from bullish order flow to bearish order flow yet. And we are probably going to continue going higher. Again, it is as simple as this, right? There's a low here, a swing low here. And there's a swing high here. First, we failed to displace below the low. Right after that, we successfully displace above the high. That'll tell you where price is going next. Displacement is used to identify order flow. And order flow is extremely important because us traders want to be trading within the order flow right? We've all heard the famous saying, the trend is your friend, and it's true, okay? When you are trading with the trend or order flow or whatever you want to call it, the probability of your trades just goes up, right? You always want to be trading within the general direction of the market. Again, here's a great example from this picture right here. Where do you think price is going next? Is it this low or is it this high? Spoiler alert, it is these equal lows here. Why do we know this? Because we have a high here, and a high here, right? This swing high never got taken out, right? And we never displaced above it, right? We don't see 2 to 3 consecutive candles close above it. No, we don't. The same goes for this high, right? That never got taken out and we never displaced above it, right? And what do we see after this pullback? We see displacement to the downside. Now, when a candle looks like this and there's a lot of bearish volume, this could also be identified as bearish displacement. You don't always need 2 to 3 consecutive candles. It could also just look like this. So this would make me very confident that this low is going to get hit next, or this low. So me personally, I like to trade inversion fair value gaps. So that would be this one right here. That's a great inversion fair value gap right here. So what I would do is I would place my entry order here, stop above the high, and I would go for these lows here. Let's see what happens. That was almost TP. Let it play out. And I would have gotten stopped out right there, right? But you get the point. This low got taken out. Why did we reverse? Again, did we displace below these lows? No, they got taken out, but they never displaced below them, right? So the market structure did not support bearish order flow. And it's obvious, right? We never closed below it. And we certainly didn't displace below it, right? What about this low? Definitely not, right? Was never displaced below and it wasn't even closed below. So when this happens, I could now start anticipating higher prices. But for me to confirm this, I would wait for the next high to get broken, which is this one, right? We break through it. And do we break through this low? No, we don't. So when we fail to break through a low, but we successfully break through a high, that means that the drawn liquidity is probably higher, right? In this case, the next drawn liquidity would be this high for me. And in order for my draw to be higher than this high, I would need displacement above that one, right? Then this may be the next drawn liquidity for me. So let's see what happens. You would need displacement above it. Again, what happens? We just take it out and we dump, right? We never close above it. So I would have no interest in going long here. I would down here because I have market structure supporting me. Up here, I would not be interested in going long. Why? Because market structure has not supported me yet. In order for me to even consider going long up here, I would need consecutive candle closures with enough volume for me to consider displacement above this high. Right? That never happened. What did happen though is we successfully displaced below these lows, and that would now indicate to me that this low is now going to get taken out. And it did on the very, very next candle. The point of this video is to get you to understand market structure. Because once you understand market structure, you start to understand how the markets are moving and how you can actually anticipate where the market is going next. Market structure is the easiest way to establish your drawn liquidity if you're struggling with that. So I would highly suggest that you dig deep into, learning the market structure, because it is one of the most important factors, if not the most important one. So this was just a quick video of me going over displacement and how I personally use it in my trading, because I use it every single day in order to make my trades higher probability, as I told you in the video. And if there was one thing that I wanted you all to focus on, it would be the market structure, because it is just, in my opinion, the most important thing to understand in order to find consistency. And that's what we all want, right? Everybody wants to be consistent. And for that, in my opinion, you need to understand market structure. And this was a quick video of me showing how I use it. I can make a more detailed market structure video if you want me to. Just leave a comment down below. If you want me to make a detailed one, I can do that. But anyway, I hope you enjoyed the video and I hope you learned a thing or two. If you are not yet subscribed, please do. That is only if you enjoy the content, of course. You don't have to, but I hope you enjoyed. And if you did, leave a like and I will see you in my next video. Bye-bye.